Distinguished guests, ladies and gentlemen, we hope you have enjoyed the afternoon. We now invite you to re-enter the ballroom as we will start our next event shortly. Once again, we hope you have enjoyed your lunch and this afternoon, and we now require everyone that you may re-enter the ballroom as we will restart our event very soon. Bagi Bapak Ibu yang masih berada di luar ruangan, kami undang untuk kembali memasuki ruangan ballroom karena kelanjutan acara kita akan segera dimulai. Terima kasih.
Sebagai holding BUMN sektor asuransi, penjaminan, dan investasi, Indonesia Financial Group atau IFG melalui lembaga think tank-nya IFG Progress menyelenggarakan The First IFG International Conference 2022 sebagai bentuk komitmen dalam mendukung upaya pembentukan ekosistem sektor keuangan non-bank yang prudent, sehat, dan berkelanjutan. Pada tahun ini, IFG International Conference 2022 mengusung tema Insurance and Pension Fund Transitioning into Digital and Green Economy Ecosystem, yang merupakan the most progressive international conference of insurance and pension fund. Selama 2 hari, IFG akan mengadakan 4 sesi conference dan 1 sesi khusus dengan menghadirkan beragam narasumber internasional dan nasional yang kompeten di bidangnya. Penyelenggaraan IFG International Conference diharapkan dapat menjadi wadah untuk mendapat insight yang komprehensif serta pembelajaran dari best practice dalam rangka mendukung upaya pengembangan ekosistem industri asuransi dan dana pensiun Indonesia yang prudent, sehat, dan berkelanjutan. IFG International Conference resmi dibuka. Diselenggarakan secara hybrid via offline di The Ballroom 3, Ritz-Carlton, Jakarta Pacific Place, dan secara online dibuka untuk publik melalui virtual platform di www.ifgconference.com. Sektor keuangan memegang peranan fundamental sebagai perekonomian negara. Salah satunya yakni sebagai sumber pembiayaan untuk mendukung ambisi dan cita-cita Indonesia untuk menjadi salah satu dari 5 perekonomian terbesar dunia. Pada tahun 2045, PDB nominal Indonesia diperkirakan akan mencapai lebih dari 7 triliun US dollar dengan PDB per kapita yang meningkat menjadi 5 hingga 6 kali lebih besar dari posisi saat ini. Untuk membiayai proyek besar tersebut, dibutuhkan peran sektor keuangan yang tidak hanya berbasis luas, namun juga harus berimbang. Akan tetapi, jika ditinjau kondisi saat ini, sektor keuangan Indonesia relatif masih kurang berkembang jika dibandingkan dengan negara-negara anggota G20. Pada tahun 2020, total aset sektor keuangan Indonesia masih sekitar 115% dari PDB. Level ini relatif kecil dibandingkan dengan negara-negara G20 lainnya. Selain itu, dalam kurun waktu 5 tahun terakhir, struktur aset keuangan Indonesia masih sangat terkonsentrasi di sektor perbankan. Sementara, sektor industri keuangan non-bank atau IKNB, khususnya sektor asuransi dan dana pensiun, memiliki porsi aset yang masih sangat rendah. Sebagai sektor pendukung perekonomian yang berperan dalam mengelola dan memitigasi risiko, serta berperan sebagai sumber pembiayaan domestik yang potensial, sektor asuransi dan dana pensiun juga perlu dioptimalkan perannya. Sektor asuransi merupakan salah satu investor yang cukup besar di pasar keuangan dengan menempatkan mayoritas asetnya pada instrumen pasar modal yang totalnya mencapai 80% dari total aset pada akhir tahun 2020. Namun demikian, tingkat penetrasi dan densitas industri asuransi masih tergolong rendah bahkan dibandingkan dengan negara-negara ASEAN 5. Adapun financial deepening baik dari sisi aset dan cakupan penetrasi pada sektor dana pensiun juga belum optimal. Pada saat yang sama, ekosistem sektor keuangan juga mengalami penyesuaian seiring dengan perubahan perilaku pasar ke arah digitalisasi dan green economy sebagai komitmen global. Sektor asuransi dan dana pensiun menjadi sektor yang turut menyesuaikan model bisnis dan strategi keuangan untuk dapat beradaptasi dengan perubahan ekosistem tersebut. Peranan strategi pengoptimalan investasi, tata kelola industri, serta beradaptasi dengan perubahan menjadi aspek penting yang dapat mendukung terciptanya ekosistem sektor keuangan Indonesia yang prudent, berdaya saing, dan berkelanjutan. Sebagai holding BUMN sektor asuransi, penjaminan, dan investasi, Indonesia Financial Group atau IFG melalui lembaga think tank-nya IFG Progress menyelenggarakan The First IFG International Conference 2022 sebagai bentuk komitmen dalam mendukung upaya pembentukan ekosistem sektor keuangan non-bank yang prudent, sehat, dan berkelanjutan. Pada tahun ini, IFG International Conference 2022 mengusung tema Insurance and Pension Fund Transitioning into Digital and Green Economy Ecosystem, yang merupakan the most progressive international conference of insurance and pension fund. Selama 2 hari, IFG akan mengadakan 4 sesi conference dan 1 sesi khusus dengan menghadirkan beragam narasumber internasional dan nasional yang kompeten di bidangnya. Penyelenggaraan IFG International Conference diharapkan dapat menjadi wadah untuk mendapat insight yang komprehensif serta pembelajaran dari best practice dalam rangka mendukung upaya pengembangan ekosistem industri asuransi dan dana pensiun Indonesia yang prudent, sehat, dan berkelanjutan. IFG International Conference resmi dibuka. Diselenggarakan secara hybrid via offline di The Ballroom 3, Ritz-Carlton, Jakarta Pacific Place, dan secara online dibuka untuk publik melalui virtual platform di www.ifgconference.com. Sektor keuangan memegang peranan fundamental sebagai perekonomian negara. Salah satunya yakni sebagai sumber pembiayaan untuk mendukung ambisi dan cita-cita Indonesia untuk menjadi salah satu dari 5 perekonomian terbesar dunia. Pada tahun 2045, PDB nominal Indonesia diperkirakan akan mencapai lebih dari 7 triliun US dollar dengan PDB per kapita yang meningkat menjadi 5 hingga 6 kali lebih besar dari posisi saat ini. Untuk membiayai proyek besar tersebut, dibutuhkan peran sektor keuangan yang tidak hanya berbasis luas, namun juga harus berimbang. Akan tetapi, jika ditinjau kondisi saat ini, sektor keuangan Indonesia relatif masih kurang berkembang jika dibandingkan dengan negara-negara anggota G20.
Bapak serta Ibu sekalian yang kami hormati, distinguished guests, ladies and gentlemen, in the previous session we have talked about global and regional financial environment. In this second session, our panelists will share with us their expertise and views on digital and green economy transformation, shaping the future of the financial sector. And now, allow us to start by welcoming our moderator for the session, Senior Asia Economy Reporter at Bloomberg, who is joining this event online. Please welcome Ms. Michelle Jamrisco.
Hello, good afternoon. Selamat siang. I wish I could join you there in Jakarta in person, but here I am from Singapore, extending greetings as we start our second session of the day. This one is titled Digital and Green Economy Transformation, Shaping the Future of the Financial Sector. So we'll try to follow on that great momentum from session one, where we heard the panelists outline the sort of macro environment, the global and regional financial landscape. And now we'll get a little bit more into the industry and how how we tackle these issues from those perspectives. We have a great group of distinguished panelists hailing from the private sector in business and investment, as well as state-linked commercial banking and microfinance. I know we have a lot to get through, so I want to, just by way of brief introduction, introduce the speakers in the order that we'll have them do their presentations. So first we will have Mr. Rahul Shah. Pak Rahul comes to us from the Mobile for Development Director role for the APAC region at GSMA. Then he will be followed by Mr. Rajiv Batra. Pak Rajiv is the Chief of Southeast Asia Equity Strategist for Asia and Emerging Markets at JP Morgan. Then we will have Ibu Viviana. Ms. Viviana Dia Ayu Retnoke is the Director of Finance at PT-BRI. And then from PT Pertamina joining just by video because she couldn't make it today in person is Ms. Emma Sri Martini, and she is the Director of Finance over at PT Pertamina. So if I could invite Pak Rahul to start us off and have 20 minutes for his presentation, please.
Hello. Is it okay if I take this off or while I speak? Good afternoon, everyone. I'm Rahul Shah, Mobile for Development Director for Asia Pacific at the GSMA. First of all, I'd like to thank IFG for the invitation to speak to you all here. For those who are not familiar with the GSMA, I'll just maybe click. Sorry, is this? Okay. Okay, so the GSMA, basically we're a member-led organization. We unite the mobile industry. That means the operators as well as organizations from across the economy. I'm sorry. So we produce the world-leading events, Mobile World Congress, Shanghai, Barcelona, and Los Angeles, and now Africa. We also conduct the regional events, M360 series. The APAC series, APAC event will be on August 2nd and 3rd this year in Singapore. So you may have heard of GSMA, I'm not sure, but our members are mobile operators who are serving about 5.2 billion unique subscribers around the world, right? And over 1 billion people now have mobile money accounts. Our industry was the first one to commit itself to the Sustainable Development Goals back in 2016. We also work a little bit with insurers, just since we have insurance companies in the audience. We have a database for devices. If you're into device insurance, then you can use this database to identify devices that were lost or stolen, or understand what the characteristics of the device are. So within the GSMA, I represent Mobile for Development. What we are is essentially a group within the company, which is at the intersection of sustainable development and commercial and creating large socioeconomic impact. We focus on the 4 key themes: digital inclusion, financial inclusion, resilience to climate change, and humanitarian response. To date, we've impacted 100 million plus lives. So before we go into insurance, I just want to take you through the digital landscape in Indonesia. So within Indonesia and within the South Asian context and Southeast Asian context, we see that in the Southeast Asian economies are doing very well compared to South Asian ones in terms of mobile penetration and smartphone penetration as well. We see that 2G, the old technology, has almost disappeared in Southeast Asia, and this is something that's important to keep in mind when we are trying to design digital interactions for customers. Because now you can expect that your customers will have, the majority of them will have smartphones. And similarly, if you take mobile money, now in GSMA we call it mobile money, you might call it digital wallets. So it's essentially the same thing from the user perspective. But in Indonesia, although not as much as in the Philippines, we see that mobile money is quite accessible and well adopted. So that's another plus for the Indonesian economy. Now, going to insurance and digitalization, operational challenges in COVID-19 obviously restricted the customer interactions in terms of physical interactions. But then what happened was, closer? Is that better? Yeah? Okay, sorry about that. So operational and business challenges in COVID-19, these created lots of barriers to physical interactions. And despite the fact that we see in Indonesia, we have wide scale of digital adoption, and customers are now willing to actually transact digitally as well. Despite that, you see that the insurance premiums collected in Q1 2021, this is from AAUI statistics, only 0.4% of the premiums collected came through digital channels, whereas 45% came from agents and brokers. So this is a bit of a conundrum. Even though we have good penetration here, we don't see the widespread adoption of digital channels for insurance. Now, the good news is insurance has become a lot more acceptable after the pandemic, and during life insurance and health insurance especially, these have become far more desirable for people. So Indonesia sort of is at the cusp of, if you think of from the digital penetration perspective, from acceptability of insurance now, it's well placed to take insurance to new segments of the population as well. So not just the traditional ones, and we'll come to one of these segments later. But we should note that insurance companies themselves can't do this, just not by themselves. They will need partnerships. So they will need technology partnerships so that they can modernize their platforms. They will also need bundling and distribution partnerships. So distribution especially because you may not have the reach and you may not have the trust also. Trust is a very key component of insurance, but if you were to partner with someone who's trusted for that particular kind of insurance you're giving, then that would really actually help the uptake. So now I'll just very quickly take you through a short overview of 2 research projects that we've conducted. So yeah, in the last 10 years, we've studied about 100 mobile-enabled insurance products. And now, I come from the mobile industry, and therefore you'll see a lot more focus on the mobile-enabled side. But essentially, this is, in a lot of places, internet access is entirely through mobile. And so it pretty much equates to digital. So we've seen about 135 services in 28 countries and 43 million policies issued. This is over 10 years. Now, when these programs started, a lot of the insurance companies were partnering with mobile operators directly and offering them, loyalty-based programs. So essentially, if you bought a certain amount of airtime, you would get coverage for a certain amount. Now, over time, this has changed, and we've seen new players emerge. We call them TSPs, technology service providers. These are similar to insurtechs, but a little bit more. They also they provide everything other than underwriting and compliance. Right. So these TSPs are now beginning to become partners in the insurance process. So where are these insurance policies being offered? Largely Sub-Saharan Africa, South Asia as well, some in East Asia and Pacific, but LATAM and America not so much. Yeah. And what kinds of policies are these? So these are mostly low frequency events. So life, health, these are the ones that dominate. Now, if you are trying to appeal to people with low disposable incomes, how do you retain them as customers when they're not seeing the benefits of the policies, right? Typically, you will buy a policy, you will not be able to, you won't really realize the benefit of it. It's just something you buy and then you hope that you don't have to use. So what these companies have done is they've started to bundle, and make insurance as part of a broader offering. So what that does is, for example, we've seen for health, you start to also cover doctor appointments. And if you do doctor consultations, then there's a continuous touch point. A lot more, benefit accrues to the customer who buys this product than if they were just buying health insurance and never using it. So what are the different models we've seen? So as I was saying earlier, so this is like the insurer-led is on the top. This is the old model where the insurance company would partner with the mobile operator, and the mobile operator would do some part of the value chain, right? They could do marketing, they could do the customer journey, and of course, because it's mobile payment enabled, they would collect the premiums and do claims disbursement through mobile money. Along the way, you've seen the TSPs come in, and as you can see, the green parts, they've taken a lot more of the value chain from the insurers, right? So other than the claim, the compliance process and the underwriting process. So underwriting, I think, throughout all the models, it remains with the insurers. But as you can see, the TSPs are beginning to take a lot more of the value chain. The last model is mobile operator-led, or you could say a digital payments provider-led in the Indonesian context. And that again, you see, there's, the digital payments provider takes a lot of responsibility on the customer interface side. So in signing up and marketing, etc. And then again on the claims disbursement side. Call centers, they may also participate in. I'm just probably going to leave these. Okay, so agri insurance. Now, we wanted to talk a little bit about agri. We've done a report on this. And now, in Indonesia, with COVID-19, we saw that the economy did contract a little bit. But even in that time frame, we saw that agriculture actually grew, and grew by almost 2%. And we also know that there are about 25 million smallholder farmers in Indonesia, around the 17,000 islands. And finally, we know that about 80 to 90% of the land that is cropped for cocoa or coffee or rubber is actually cropped by smallholder farmers. So clearly, smallholder farmers are a very important part of the workforce here. Farming is a major employer as well. So let's talk a little bit about something that we've learned on the agri side. Now, if you look at insurance on agri, around the world, only 20% of farmers actually have insurance. And this is despite the fact that their risks are actually increasing, through climate shock or through volatility in the markets, etc. So despite that, only 20%. And what causes that? We've studied several barriers, so clearly the farmers, first of all, not aware of insurance. They might not have trust in the insurer, or they might find that it's too expensive. So there's a series of barriers. But on supply side also, it's not easy to serve farmers, especially smallholder farmers, who may not be able to afford the kind of premiums that insurance companies are used to charging. So are there methods that can be used to reduce the cost of agri insurance? So yes, there are. We studied a lot of index insurance schemes. Now, index insurance is something that's based on a predetermined index, right? So for example, you might say rainfall. Now, if there's a certain amount of rainfall in an area, then you don't get insured, or if it's less than that, you might be able to claim insurance. And the advantage of these schemes is that you don't need to do like an indemnity insurance, right? You have to do a loss assessment. These are predetermined based on certain metrics and measurements. So you don't have to do a loss assessment. So that really speeds up the claims process. It makes it simpler for farmers. But what it also does is, in some cases, there's a lot of capital requirement upfront. So one thing we found with weather index, right, especially rainfall, is that there is a bit of basis risk, and it is something we've studied this to find whether there are other methods. So for example, in Indonesia, you have access to the NOAA data for rainfall. Now, is that granular enough, or can we get more granular data? And that's what CML, or commercial microwave links data, can do potentially. We're studying this, and what it is in the rural areas, you find that operators, mobile operators, their towers are not connected by fiber. I mean, it's not feasible to actually do that. So you use microwave links instead. And if you're able to measure, because rainfall actually distorts signals, and so if you're able to measure the differences in signal strength, and then you can convert that into estimates of rainfall, that's actually worked quite well. So as an example, in Sri Lanka, we've done these experiments over about 3 months. And on the left, you can see that we're comparing measurements of rainfall with estimates. So measurements being made by the Sri Lanka Meteorology Department, their rain gauges, versus actually what estimates we're getting. And you can see on the graph on the left-hand side, it's really quite close. I mean, there's a good estimate. The CML may underestimate in some cases, and so that's something that we need to correct. We need to fix the algorithm. But you can see on the right-hand side on the map how dense. So the red dots are actually the CML links, and if you can see the blue dots, those are the rain gauges. So there are very few versus thousands of commercial microwave links. Now, CML data, as I said, is still nascent. We're still studying this. We think that initially what will happen is we will use it for things like nowcasting. Is it going to rain, a flood alert, etc. But eventually, as we get more observations and as the technology matures, we expect that we will be able to use it for insurance as well. So I wanted to also, I know we're touching upon insurance quite a bit, but I want to take a slight detour on our work in Indonesia. We've just created a lab called the Mobile Innovation Hub here. And I want to talk about it for a little bit because we're talking about green as well. So why Indonesia? For obvious reasons, I think we've heard quite a few. We're talking about a top 10 emitter. We're talking about a country which is a digital powerhouse in ASEAN. And we've seen tremendous success in raising capital over 2020, I think $6 billion across sectors. Indonesia is also the president of G20, so hopefully we can make a difference here. So what we're going to do is essentially focus on 3 things. And this is, we're working with our implementation partner, GIZ, on this. So we're going to focus on applications to sustainable energy. We're going to look at recycling, and we're going to finally look at natural resource management as well. So this is all in a very aggressive time frame of 1 year now. We have 3 people on the ground here whom we're very happy and fortunate to have a very talented team. Hopefully we can pull it off. And over the year, what we'll try to do is bring together key stakeholders, governments, city agencies, mobile operators, private sector, etc., and development partners as well to achieve these outcomes. So just a very quick acknowledgement to our funding partners, the Bill and Melinda Gates Foundation, UK Aid, and the German government. I'm sorry, this is very hard to pronounce that. But let me also summarize at the end, what we've just discussed, because I think there are certain lessons that we should keep in mind, and especially for Indonesian insurers in the traditional insurance business, given that we are looking now at digital coming up very quickly. So we've seen that Indonesia is a vibrant digital economy, and as other sectors are racing ahead, right, insurance will need to keep up or they will lose touch with the consumers, right? As we've seen also that in our observations, TSP-led partnerships are becoming dominant. So in our observation, it was about 58% of partnerships were now TSP-led when we looked at those 3 models. So it's very clear that digital insurers are here to stay. Yeah, there's no question about that. So let's get that out of the way. They've come to market with no past. So essentially with zero-based planning, right? So it's they can have an entirely greenfield strategy. Their operating costs are typically lower by design, and they have much wider outreach with customers. They also understand their customers very well. So that's one thing that, when we talk about contextual insurance or embedding products, they're very good at doing that because they know their customers well, and they know the customers' lives well, and how the cadence of life as well. So what they're doing also is rapidly developing partnerships. That's another approach they've taken. And finally, we should keep in mind this is not all dark, right? It's not like they're here and they're going to take everything. The key is digital insurance is going to expand the pie. So you're able to actually address customers who are not your customers today. And therefore everybody can win. And we've also seen that agents and intermediaries are still here to stay. So for example, in the US, I think it's offline to online. Offline is about 50 to 60% of the market still. So it's not like, the agents will all go away. The role of the agent may change. They may need to become a lot more of advisors rather than just, sellers of insurance, right? So they need to become a lot more consultative sellers. And finally, digitalization is a journey, it's not a destination. So once you start, it doesn't mean that you're going to reach an endpoint and that's the end, right? So what you will need to do is you need to obviously get your technology platforms upgraded, but the HR challenge is equally difficult. If you went to a college student and asked them if they want to work for a traditional insurance company, the answer is probably going to be, what? And so, that's going to be tough, because if you want to digitalize, my time's up, but if you want to digitalize, then you will need to have the right resources, and you'll need to manage them, you'll need to give them the right kind of perks, and that's how you're going to have to do it. So I'll stop here, but and we'll take questions, I guess, at the end. Thank you.
Thank you, Pak Raul. That was a great introduction, especially from the mobile tech perspective, a key part of this conversation. So I've taken a note of a few of your mantras here. The digital insurers are here to stay. We need to expand the pie via digital. That's something that we'll get at in our conversation later, including with questions around where this industry can expand, how high is that potential for the customer base in Indonesia, and of course that this is all a journey, not a destination in digitization. So that's a great way to kick us off. I think we'll next go to Mr. Rajiv Batra. Rajiv, I understand you don't have a presentation via slides, but is there anything that you'd like to kind of start off with to kind of center our ideas about how investors are seeing these issues today?
Thanks a lot, Michelle. Good afternoon, everyone, and thanks, IFG, for inviting me to present with the distinguished panels in today's session on green economy and digitalization impact on the financial sector. We already have a great start in morning where Pa Erlangga Hartarto, Ibu Sri Mulyani, Vice SOE Minister, Pa Reza, Pa Geeta, and various other speakers presented and shared their view. So my job today is they have made quite easier, because I will be connecting dots, saying what's actually happening in terms of green economy and digitalization on the portfolio management side, how the research houses are viewing, and what difficulties my friends on the portfolio investment side, pension fund side face while investing based on that theme, particularly this year where we know how the stock listed on the green economy side and the ESG side, or even on digitalization side, are facing the brunt of the rising rate environment. But just to highlight a point, what Prakash mentioned, that EM ex China growth is slowing, and versus GM, the gap is narrowing. So I will just highlight that ensuring the green economy transition is critical, because if you move towards green economy, it will generate, number one, more job, more business opportunity, and energy independence. Now, all these three variables will give more growth. So it means if you go for green transition, it will be growth accretive, which is now lacking in this part of the world. But what is most important and required for that is providing credit, providing finances to low-income countries, to low-income communities, so that they can adapt the green technologies which is needed for this transition. Now, no transitioning will be an injustice to two people. Number one, to the future generation if we are not transitioning. And second, to the low-income countries and communities who are bearing the burden of this higher pollutions in their country. So that's the reason why green economy transition is most important. I will touch upon the digital part later, but let me first start with the green economy transformation or the climate change, which is a key topic for the ESG for most of my asset owners, and who look forward for a help from fund managers or asset manager, which help them reduce their carbon footprints on their investment, number one. Number two, generate and help them for a carbon transition or even carbon trading in the current environment. And most importantly, reach towards a climate commitment which is needed. So about 70% of the asset allocators have already started considering ESG in their investment framework, compared to 50-odd% 3 years back. Over the last 2 years, we have already seen people are recruiting a responsible investment team, which are giving target to their asset managers to think about return generation in an environment or in a circumstances which pertains towards a better climate, a better environment. Nonetheless, some of the people are still focusing on higher returns over higher environment, but there are still group of people who focus on environment mandate much more compared to, you can say, even returns. So these are largely family offices who have a strong value stemmed from their philanthropic activities which they are doing. That means people are slowly and steadily increasing their mandates towards an environment overall. So what exactly is needed? Environmental analysis needs to be ingrained or combined with the fundamental analysis. Similarly, fundamental research firm or research houses needs to give ESG rating and analysis to their fundamental analysis that comes out with better return. That also means even the fund management side needs to look into portfolio into the granular detail, that how ESG assessment is being taken in the framework of the investment analysis. Similarly, fund manager should also be evaluated on their ESG efforts which they have taken while investing or while taking a call, because that is also an important phenomena, which clearly means we are witnessing shift in nature of investing right now. So the traditional way of looking at fundamentals, bottom-up factors is now evolving as people are taking ESG also into the account, which take negative externalities into account and could be reflected over time in the cost of capital as well as in terms of revenue stream through. So companies will need to take into account how they are using natural resources, because that will impact their capital or even their revenues too. Similarly, companies, how they are addressing environmental, that is, what kind of a trade-off they are making in their long-term goals and short-term goals to meet their customer demand will be taken into account when investor or research analysts like us judge the company overall. So in that sense, let's take a real world example. If a PM is reviewing an integrated oil and gas companies, what the research job is to give them the ESG score, sustainability factors, and based on them, portfolio manager needs to evaluate whether this kind of a positivity is well discounted or not. In that sense, then you take a call how much I will buy into it or I'm not buying into that particular company. So in that sense, Europe has been the front runner in adopting all this kind of a standards, and they have come up with their SFDR, that is Sustainable Financial Disclosure Regulation, into account. In case of Asia, yes, regulators are making a big push for people to adapt that, but the other two factors which are motivating companies to adapt that is long-term performance, because in 2020, in 2021, we have seen companies which have adapted to the sustainability, they have generated a better return, and most importantly, to create the positive impact which I have discussed at the start. But one of the key challenge of the sustainable investing is to withstand is the short-term trade-off. As I've said, when green economy favored sectors like electric vehicles, renewables, etc., have underperformed this year, versus the old economy or the fossil fuel oriented sectors like oil, coal, energy have outperformed significantly, prices have gone higher. It is that point of time portfolio manager needs to take into account the long-term approach, favor the structural trend, and take the transformation call, which takes years to play out. So that brings me to the point what Prakash was highlighting today, whether there can be enough alpha. Yes, alpha can be generated through ESG, through green economy, but it takes longer term. It cannot be generated in 3 months and 6 months time. So if you look, as I've said, 2020, 2021, MSCI ESG Leader Index has significantly outperformed country indexes in both the years. It has generated a huge amount of an alpha, particularly for an Asia index or Asian equities, if you would have seen over the last 2 years. However, one needs to be careful that green investing or the ESG investing should not be considered as a philosophical approach. It should be considered more as an empirical approach where different situation, different things will have a different impact on your investment as an asset class. So you need to run regression which each and every variable to see during which situation what can do well overall. In that sense, people do complain that companies which are doing great, going great on the green or on the ESG side are traded, Rajiv, at a very higher valuation. Fair enough. If they are the leaders, they will trade at a higher valuation, and that's where you are generating a return. So as a portfolio manager or as an analyst job is to look forward for the companies who could be your next ESG leader or the green economy champions. That's where you will be able to generate a higher return. So that's largely about on the green economy. Now, highlighting what Rahul discussed a few minutes back on the digitalization side. So there's no clear definition on the digital economy. We believe digital economy is the one which has include various fast growing sectors such as e-commerce or various e-economy kind of e-services and stuff like travel booking, digital advertising, digital media, fintech, cloud computing, and cybersecurity. But the point is, with the world spending more time online, digitalization is getting much more a necessity in the current world. I know in 2020, people have used a lot of online applications, shifted world online, and that we saw more expansion. It continued in 2021 also. But now with the reopening, endemic coming, people's doubt have started rising, whether this will survive or not, whether they will be profitable or not, especially in the environment which we are living in. Higher interest rate situation coming, Fed rates are hiking, dollar liquidity is going down, which means no more easy money in this world, higher inflation. So that brings a doubt on this high valuation or non-profitable companies, whether they will exit or not. The point is very clear, they will survive because we are getting into the world which is much more competitive. Similarly, at this juncture, where when we compare emerging market with the developed market, adoption rates in EM are still way lower on the digitalization side compared to the developed market world. Top of it, if we want to make a penetration, we want to urbanize even the rural areas on various emerging market part world, even in Indonesia, digitalization is the only solution that can help you achieving that. Hence, this is the reason why digitalization is here to stay. It will show the clear real economy, real sector impact in the coming time period. Financial market, yes, because of liquidity being lower, or you can say even dollar liquidity cost going higher, people shifting back towards bond or the fixed income market. Funding could be an issue, but that's where you will see some consolidation, some mergers and acquisition happening. Some of the companies which were high flying in 2020 and 2021 may fall off from the benchmark, but that does not mean industry will die. Industry will survive and prosper at much more rate. And that means they will become a huge part of global equity indices, credit indices and stuff. And with passive money becoming bigger and becoming bigger, this indexed name and the sectors will get benefit due to that. So overall, in this particular scenario, we do think that digital economy as an investment theme deserve to be part of investor portfolio, especially those with the long-term horizon and view overall. They have grown at a breakneck speed in the recent year. We still believe growth is still in infancy with innumerate emerging economies yet to show the full potential of what digital economy can deliver. With that, let me take a pause and hand it back to Michelle.
Thank you, Pak Rajiv. That was a great introduction to the investment side of things, which is another big piece of this, and actually spurs a lot of questions, at least in my mind, I'm sure in others, about how do we set up these standards? How do we kind of promote the standards from the asset manager's point of view to the companies that are implementing them? So that'll be an interesting piece of the Q&A when we move forward with that. But if we're going to move on to the next presentation, if Ibu Viviana, welcome to the stage, she could take on her 20 minutes time for opening remarks.
Okay, thank you, Michelle. So good afternoon, everyone. First of all, thank you very much for IFG for inviting Bank Rakyat Indonesia in this very special occasions to share actually our experience. So mainly about two things. The first one is on digital economy. The second one is on the green economy. We want to tell you how the theories that we read a lot about this digital economy and also green economy, then this theory will meet the facts actually on the ground. And then how Bank Rakyat actually react on that and what kind of initiative that actually we are preparing of. Okay, so if we are talking about the digital economy, actually there are at least three things that are very important, especially for rakyat. The first one is the supporting infrastructure. The second one is about the electronic business process, or how you want to conduct your business process. And the last one is on the electronic transactions, or how you want to sell actually your products or your services. So I think BRI, our Bank Rakyat, has been famous for its very unique position. So we differentiate ourselves perfectly compared with other banks, where we are actually serving the bottom of the pyramid of Indonesia populations. So it's not a very famous segment when you want to tap into the micro and ultra micro segment. And there are only few players actually in this bottom of the pyramid. Why? There are at least two things. The first one is about the riskiness of the segment, and the second one is about the high cost that you have to absorb when you want to play in this mass market. So as the first mover of the players in this segment, actually Bank Rakyat has a lot of benefits. The first one, if we are talking about the infrastructure, we are dedicating more than 5,000 micro outlets. Then if we are talking about the people, we are dedicating more than 27,000 people, employees, to serve this mass market. And we also have, I think at this moment, we are the most innovative in terms of product proposition in micro segment. And of course, one point to note that last year we just integrate the biggest bond lender in the country and also the biggest group lender in the country, which are Pegadaian and PNM, and that pushed actually the ticket size of Bank Rakyat even lower. So to give you more color, so Bank Rakyat itself, the average ticket size for the borrowers is only 18 million rupiah. Pegadaian, the ticket size, the average is only 7 to 8 million rupiahs. And if we ask PNM, their average ticket size is only 2 million rupiah. So it's very small ticket size. So then the challenge actually for us as a leading player in this market is how then you can manage the cost to serve. Because then will become very questionable if, how can you manage your business? You have to bear high costs in this kind of a segment. So probably some of you then will think that to be able to manage the costs on serving this segment, then you have to go 100% on digital base. You have to digitize all of your business process. You have to introduce to them the digital product and services. Well, that's not 100% correct. So since 2013, Bank Rakyat has been doing a research about the customer behavior in this micro and ultra micro segment. The last research that we did actually is on 2020. And the findings that we found from our customer in micro and ultra micro, it's not surprising, but it's very important to be noted. The first one, these guys, actually they are very familiar with smartphone. They are very familiar with smartphone, even though the penetration of smartphone in this typical segment, the micro and ultra micro, is still below the average of national smartphone penetration. So it's only like around 30%. Then the second finding is they still prefer cash. The third one is they like to do financial transaction with a financial institution that can be trusted, that locally embedded. And another finding actually is they like to do a financial transaction using an agent rather than digital banks. And I think because of those findings, then Bank Rakyat approach actually is combining the physical and digital things, or we always say it like a digital approach, physical and digital, or we call it a hybrid bank strategy, where we combine actually our physical presence, because we already have it, with our digital capability. So actually, what are we doing in terms of physical presence? It doesn't mean that Bank Rakyat do not do anything on its physical presence. On our branches, we are transforming the back office. So we are reviewing very carefully the back office people and try to identify the people who can be the frontliners. So the branches model will become more slim. Then we also empower our brilliant agent. So this is the agent banking owned by BRI to become the future channels from Bank Rakyat to tap into micro and ultra micro. And the last one is we are empowering the loan officers. So last year we just add one more function to our digital advisor. So digital advisor is only a function that we embedded in each of our account officers. So what is a digital advisors? They have three main roles actually. The first one, they have to assist the customers on how to open banking account using their smartphone. It sounds simple, right? But it's very important. The second one, their role actually is to assist the customers on how to do the financial transaction using the smartphone. And the last one, and this is also important, is how to assist the customers on doing financial transaction using smartphone, but with a very secure manner. For example, a simple suggestion to the customer like you do not have or you should not share your password even with your brothers or your sisters. It's a very simple message, but you have to tell to your customers repeatedly. That's why we are adding this digital advisory function to the loan officers. And why we do this, I believe, I have to agree with an opinion that digitalization is about a journey. And what we are trying to do with our physical presence actually is to help our micro and ultra micro customers to be more digital savvy. We want to follow their journey actually, and once they become digital savvy and more comfortable, then we can use the other side, the right hand side here, the digital capability, where we also provide with a digital product and services as well. Next slide. So in the several next slide, it's only like an examples actually about what Bank Rakyat initiative, if we are looking at, if we are talking about the digital initiative. The first one is BRI Spot. So BRI Spot was introduced in 2017. Initially, it's only digitizing the paperwork because we want to improve the productivity of the employees. And this is very crucial for us because then if you want to do digitalization, then some institutions say then you can reduce the number of your employees, but because Bank Rakyat is an SOE, that's not something easy that we can do. Therefore, we're trying to implement BRISPOT to improve the productivity of the employees. So initially it was a digitized paperwork, but now with a continuous innovation from our team, it also become a very smart applications for the loan officer actually to manage their own performance. So now every micro loan officers in Bank Rakyat, they can check daily, on daily basis, how many rupiah that I have contributed to the company. So what is their own profitability, each micro loan officers. So they can manage actually what kind of product that they want to sell in order to achieve the target of profitability. So it is a part of one of our culture that we call the performance driven culture. It means that every employee in Bank Rakyat, they can plan their own success. And the company actually is only providing the playing field. So the BRISPOT, I think we start to enjoy the impact where the productivity improve from like 320 customers per loan officers, now it's become 450. And also, it's also accelerate the SLA of approval. I think it's many times faster. And the second initiative is about the BRI Mobile. So I think this is not something very special in Indonesia banking industry, where all of banks try to launch and introduce their mobile apps. But here, if we see internally, we saw still very huge potential from BRI Mobile because from roughly around 100 million customers that we had, it's only 16% penetrations. So it's our job actually on how to increase the penetrations in our customer so they can, more comfortable using the BRI Mobile. The next thing is about the agent banking. So agent banking actually is a perfect example of a wealth distribution between a bank and their customers. Why? Because we are selected from our borrowers to become our agent and equip them with digital tools to become our marketing channels. Now the transaction value every year is already above than 1,000 trillion rupiah, and Bank Rakyat collected 1.3 trillion fees, rupiah fees in terms of fees. And if we are talking about that number, it means in the borrowers, our billing agent, they also receive at least twice. So it's like 2.6 trillions that they receive from becoming the billing agent. And the next initiative is on Senyum Mobile. Senyum is Sentra Layanan Ultra Micro or Ultra Micro Service Center. It's a joint acquisition platform that deployed in Pegadaian, PNM, and Bank Rakyat, actually to accelerate the penetration in Ultra Micro. So that's the story from Bank Rakyat about the digital economy. So our themes actually on digital economy actually is how we can digitize this bottom of the pyramid. It's not an easy job, but we are on progress, make it happen and help the governments actually to achieve like 90% financial inclusion in 2024. And the second story actually is about the green economy. So if you're talking about the green economy, so I think one of the aspiration from Bank Rakyat actually, if you want to develop your business, actually you don't have to do harm or sacrifice the environment. So this commitment actually started in 2013, where we released a sustainability report. It's only few in the Indonesia banking industry at that time. Then continue in 2015, 2017, we are trying to review our credit policies by including several items related with our CPO borrowers. But this is still a long-term game to play for Bank Rakyat, because to be able to do this, it's not only our bank, but also all of the big banks in Indonesia have to be in the same level playing field. So like borrowers cannot, just go from Rakyat because, they are not eligible for the loan, then they go to other banks that have probably lower standard of ESG implementations. And as a part of the commitment, the governance for ESG itself, we already put in a system. We had an ESG committee led by the CEO. Then we also just set up ESG divisions to help Rakyat actually to implement the ESG implementations in our blueprint. Next slide. So this slide actually only summarize what have been achieved by Rakyat. So it's not done yet. The homework is still, lots, especially if you see here, our position in terms of social highlights is very strong. Like 58% of our portfolio actually belong to the ESG criteria. But then we also realize that the wider gap that we have is on the environmental side. It's still like very lag behind. That's why the focus of Bank Rakyat going forward actually is how to accelerate the implementations in terms of environmental side. Next slide. Okay, so I think this is the last slide. So we have put the blueprint of our ESG implementations. And until 2026, we already set up a map with a zero carbon emissions. Actually, in 2026, has become the main goals. Okay, so I'll give back to you, Michelle. Thank you very much.
Thank you, Ibu Viviana. That was very nice to hear how that journey is going, both on digitization as well as sustainability. And especially, as you mentioned, when you're dealing with maybe a challenging cohort, at least on the digitization side, how you face those problems that all have, and maybe to a greater degree in terms of convincing people to adopt the digital technologies, also guarding against the cyber risks and everything else. So certainly a lot of points that we'll try to get to again in the Q&A. But for our last presentation, we'll be playing a video from Ibu Sri Martini, who couldn't be here in person today, but shares her thoughts.
Very good afternoon, ladies and gentlemen, distinguished guests, distinguished panelists, speakers, distinguished participants. First of all, I would like to take this opportunity to thank you to IFG as an organizer for this highly event, International Financial Group. Thank you so much again for the opportunity for inviting Pertamina to sharing our exposure and our implementations related to the ESG and the green economy transformations. First of all, I would like to divide it into 4 subtopics in these sessions related to digital and green economy transformations. So against the first subtopic will be explaining related to the digital business transformations, what we have been doing within the Pertamina Group related to this digital business transformations. The next slides. So as you can see in the page number 3, that this is the key insights from the global energy perspective reference case. So as we are all aware that all sectors has been affected by the COVID pandemic as well as by the business disruptions. Also including in oil and gas sectors, including Pertamina in this case. So we have been affected by the COVID pandemic for sure, as well as for the digital transformations and the new ways of working after the pandemic COVID. Not to mention about the business disruption itself, whereby the fossil fuel base is becoming the sunset industry in the next 20 or 30 years down the road, that this will be becoming a sunset industry. That's why Pertamina ourselves has to start preparing for the future business as a footprint for substituting the fossil fuel sunset industry. So as for the digital transformations, we have been implementing a lot of effort within the Pertamina Group to transforming the business model, to supporting new ways of working, and also to improving our efficiency. So this is practically the benchmark for oil and gas related sectors, including oil, chemicals, gas, electricity, and digital transformation within this global energy perspective. In the next slide, on the page number 5, we will share that our experience related to our business restructuring within Pertamina Group. As one of the key initiative, strategic initiative to preparing our future business, Pertamina since the year 2020 has been implementing the subholding implementations, subholding implementations as our business restructuring organizations. We are dividing into 6 different subholding. First of all is upstream, and then refinery and petrochemical. The third one is related to the commercial and trading. The fourth one is the gas. And the fifth is the power and new renewable energy. And the last one, but not least, is related to integrated marine logistics. So these establishments of legal entity subholding is intended to see that this Pertamina organizations, Pertamina Group will be elevating our operational excellence, as well as improving our business agility into different 6 subcluster, different cluster into 6 different subholding. So as well as that, we can be expecting that all the subholding will be more focusing on its segment process. And we can expect also efficiency through the centralized procurement, through the resource sharing, as well as to providing shared services at the holding level. So the role of holding would be much more on the strategic initiative, defining policy direction, as well as to orchestrating and consolidating as a Pertamina as a group. And the implementation and the executions will be executed at the subholding level. So we can expect that the agility, the flexibility, and the speed of processing will be obtained by executions at the level of subholding. So we can expect also the flexibility in the business strategy as well as in financing. In the next slide, on the page number 5, we will explain also what we have been doing related to the digital business transformations as a follow-up after the business restructuring and organization within the Pertamina Group. So as we are affected also by the pandemic COVID, as well as the digital transformations, digital transformation is being accelerated by the pandemic COVID to addressing this challenge into become the new ways of working. So 10 digital technologies driving industrial revolutions 4.0, including mobile device as well as any other reforming and transforming operating model. So in our case, in the Pertamina Group, so we are facing also the business challenges in this case. The first one, of course, we have to overcome the pandemic COVID related to the changes of the behavior, customer behavior, as well as the lowering the demand and the shifting the demand of each particular product and all that. So and also we are required to facing our energy transition phase. Yeah, so that's why in Pertamina Group we already put more focus on promoting new and renewable energy as well as ESG implementations across the group. So it's not only related to the power, but also in the way we are doing the operating. We will be using the greener energy and shifting to the more lower and lowering carbon emissions. So this is basically what we have been doing related to the sustainability actions, policy and program, as well as ESG implementations. On the next slides, on the page number 6, we can see that the digital business transformations is executed across the group within the Pertamina, so including the digital upstream. So this is upstream production optimizations, also already executing digital business transformations, and upstream data governance and data analytics. On the subholding, the other subholding, just like the case of refinery and petrochemical, we already use also digital refinery and using artificial intelligence to do the predictive maintenance in this case, as well as a basic operation core, and optimizing the inventory. So I think the interventions using of the digital and digitalization business transformations, it will optimize the cost efficiency as well as the cost effectiveness. Not only in those two subholding, but also in subholding logistic planning, also already applying digital business transformations across the group. Just like you can see on this slide, that it's applied to all any operational excellence, just like the case of digital procurement and then integrated operation center, as well as our application, My Pertamina, and through the gas stations for the digitalization SPBU. And then we can move on to the next sections related to the ESG commitment, governance, and performance. As you can see on the page number 8, this is showing that our commitment, Pertamina, to support and to promote sustainability. We established a steering committee that will be making sure that this sustainability policy and program will be executed across the group within Pertamina. So we have established sustainability committee at the holding level, and then being cascaded into subholding level to the 6 different subholding. And the member is supposed to be consist of the president director, the CEO of Pertamina Group, as well as the CEO of the each particular subholding. Now we also established also the sustainability policy that already established at the holding level, and it will be referred and executed at the subholding level also. So we will make sure that Pertamina will be becoming environmentally friendly company, as well as a social responsible company, and then making sure that Pertamina will be becoming the good corporate governance company. In the last year, in the year 2021, we also obtained our ESG score, assessed by independent international assessor, Sustainalytics in this case, and we have obtained quite a good score in terms of ESG score. We are rated at the score of 28.1, so it's quite a good ESG risk rating. We can compare to any other NOC and IOC in the next slide. So this is quite notable, whereby Pertamina is able to improve our ESG score less than a year. Before in the year early 2021, our ESG score still at the rank of 42.8. So I think this is for 41.6. Now it's already becoming 28.1. So it's quite notable improvement during last year 2021. On the next slide, on the page number 9, we can see our positions compared to any other NOC and IOC. So as you can see that our positions at the industry with the peer industry, we are at the rank of number 15. So it's quite good positions compared to any other NOC IOC. Even if we look into the sub industry, we are ranked even at the better positions, number 8. So it's quite notable again, as mentioned earlier. So the risk level itself, it's quite improved. Previously at the severe risk, the level risk, and then we already moved to the medium risk. So I think it's quite achievement for Pertamina as a group, and it will be improved along the way going forward. Just to making sure that this ESG score, not only obtaining the score, but also the more importantly is how to implement ESG and SDG at all level across the policy and program within the Pertamina Group. On the next slide, on the page number 10, this is just showing you that our commitment to support the sustainability is quite intense, and we are actively involved at the B20, and our CEO also, Ibu Nika, is already sitting as a chairwoman in this B20, and clearly that B20 supports G20 to developing an impactful policy recommendations related to the sustainability. So this is part of our commitment that Pertamina is quite active also in this particular space and movement related to the sustainability. We can move to the next subtopic for the ESG strategy and initiative that Pertamina has been doing so far and will be continuing in the next coming years. So as we can move to the next slide, page number 12. So it explained that the effort which is already made by Pertamina, Pertamina has reduced about 27% emissions in 2010 up to 22 for supporting Indonesia's nationally determined contributions, or NDC. So I think it's quite achievement. For the past 10 years, Pertamina emission reductions achievement is amounted up to 27% compared to business baseline, which is measured since 2010. So most of the reductions is coming from the flare gas utilizations related to the subholding upstream as well as subholding refinery. So utilized for own useful and for gas supply to customer. And the second contributor, the biggest contributor, is coming from any other activities still at the upstream subholding as well as the refinery. Just like for the effort to commercialization CO2, venting to customer in upstream, and other process optimizations in geothermal activities. And also the third contributor is coming from the energy efficiency, whereby all across subholding trying to improve energy efficiency, whether it is in the subholding upstream, subholding refinery, as well as subholding power and new renewable energy. So waste heat recovery in upstream and refinery or other energy efficiency initiative is already executed at subholding. On the next slide, on the page number 13, this is describing that Pertamina in the making of detailing the program of net zero emissions roadmap initiative that is aligned with the government initiative. So government is established the net zero emission target by 2060. Then Pertamina ourselves also aligning to that government program and try to detailing the net zero emission roadmap initiative. Our project is divided into 3 different work streams. The first one is the net zero emission roadmap itself. So define the Pertamina end-to-end decarbonization strategy. And the second work stream is related to the carbon accounting. So identify the gaps in existing practices and design a carbon accounting system, including MRV, measurement and then verification itself. And the third work stream is related to the carbon market and business building. So develop carbon market capabilities as well as identifying opportunities to capture additional value from carbon market and value chain, as well as to market aggregations and taking into account latest regulation as well. So I think this roadmap is already being executed in Pertamina. This is also concerning the regulatory policy as well as to the needs of investor to obtain funding going forward. Now that Pertamina is more affirmatively supporting and implementing the ESG implementations, not only for the sake of environmental and social, but also is to obtaining the lower cost of funding and to gaining also the investor that is very committed to the green and environment concern. Yeah. On the next slide, on the page number 14, this is strategic initiative to abate emission until 2060. So this divided into 3 scopes. Scope 1 is related to the energy efficiency across the group, and then flare gas utilizations, and low carbon heat and power, and nature-based solution, as well as CCUS implementation. So CCUS is carbon capture, utilization, storage. It's derived under scope 1. On the scope 2, this is related to sourcing of low carbon power. So this is renewable energy is shifting to the more green energy, to the greener energy. And we have one particular subholding that is focusing on the new and renewable energy, which is subholding power and new and renewable energy. So this program under scope 2 will be executed under subholding PNRE. On the scope number 3, this is also will be executed with the subholding power and new renewable energy related to the green refinery development, encouraging the use of greener fuels and all that. This is something with related to the implementation that will be executed under subholding power and new renewable energy. You can see also the table at the below, Pertamina long-term emission reduction. So this is the targeted number in terms of percentage if we compare to the business as usual. So we have put this target as our master plan, as our commitment also to reduce carbon emissions. On the next slide, on the page number 15, this is Pertamina strategy long-term target. As the detail of the net zero emission roadmap, Pertamina also has establishing the priority focus that is mapped by the ESG perspective. So there are 3 focus that is falls under environmental aspect, and there are 5 focus under social aspect, and the other 2 aspect under governance perspective. So this 10 focus will be cascaded into subholding level for the execution and the implementations that is aligned with each particular focus for each cluster. related to the addressing climate change, as well as reducing environmental footprint, protecting biodiversity, and all that. So that focus will be detailed down at the subholding level. On the next slide, I think this is just to follow up the ESG initiative. The previous slide is much more focused on the ESG aspect that is derived into 10 primary focus. And this will be derived into more thematic program related to the ESG initiative. So it treated as a top priority based on time to impact and value. So we have divided into 15 category. And the box with the red star, this initiative will be related to climate and decarbonizations, which consists of net zero roadmap, as mentioned earlier, for the net zero emission roadmap. And the second one is related to decarbonization. And the third one is related to deliver new renewable energy capacity commitment. It's already stipulated in our master plan as well. We can move to the next slide on the page number 17. So all the roadmap as well as strategic initiative, it's accompanied also with the adjustment in terms of capex. In 2021 is only 1%, and then in the year 2030, the new renewable energy is already becoming 17%. So it's quite a significant increase during 10 years period, and it's already followed also by the capex allocation itself. So if you can see on the right hand side is the upstream, downstream still dominating the capex portions. But if you can see the gas and new and renewable energy represent 14% against 80 billion. So it's still a big number, even though in terms of percentage is quite small. But if we calculate as absolute numbers, it's a quite significant amount for this allocation for the new and renewable energy. On the next slide, on the page number 18, this is also just to showing you that the Pertamina new renewable energy portfolio is targeted also to achieving 17% in our energy mix by 2030. So this is geothermal, hydrogen, as well as green refinery, bioenergy, circular carbon economy, and new renewable energy is already put the details in our master plan. So steering committee will be from time to time making sure that this program will be executed and implemented across the group. On the next slide, on the page number 19, we have also signing a cooperation agreement with all the strategic partners to supporting the decarbonization initiative. We are fully aware that Pertamina ourselves cannot do alone by ourselves, because this is requiring specific skills, specific resources, specific technology that we currently don't have yet the capabilities or the exposure on that particular area. So that's why Pertamina is inviting the partner, is collaborating with the all strategic partner that can bring the technology, the know-how, as well as the exposure and experience in this particular decarbonization initiative. So if you can see in the EV ecosystem, in the clean LNG, hydrogen, as well as CCUS, and green industrial cluster and nature-based solution. So this is a concrete follow-up, following the roadmap. Then we already signing the collaborations agreement and cooperation agreement with related partner. We can move to the last subtopic related to the finance-related initiative. How that this ESG commitment, this digital transformations, and at the end will be affecting to the green economy transformations, and will be affecting also to our financing strategy. On the next slide, on the page number 21. So this is just to showing you the example how that ESG financing, green financing, is already started and initiated in many different subholding. One of the example is applied in subholding power and new renewable energy with related to the initiative Green Bond, and the other subholding also subholding gas is trying to implement a transition bond, and the sustainability link bond also is trying to promote it by the subholding PNRE. So all the framework is still being finalized. And when the times is appropriate, when the market is friendly, then and the needs is there, then this particular subholding is pretty much ready to sourcing funding from the market, utilizing the green instrument. I think this is gonna be the last slide related to the finance and as an impact of the ESG implementations. One of the things is related to the budget. The budget will be tagged as a climate budget tagging. So I think this is a new discipline for ourselves, particularly in Pertamina Group. This year is still being exercised, the framework, the policy, and the identifications, which particular budget that can be tagged as a related climate budget. So I think this is something that we can come up with some measurement, how affirmative and how big the portions that is related to the climate budget tagging. So this is will be applied also to all subholding at the Pertamina across the group, and this is also becoming the direction from our shareholders, Ministry of State-Owned Enterprise, and eventually will be reported to the shareholders related to the SDG-based corporate social responsibility implementations. And then this objective also is again just to measure also our commitment related to the ESG implementations, and as part of our disclosure related to the sustainability budget to all related stakeholders. So again, this also becoming a new discipline for Pertamina. So current progress, currently this initiative is getting the support from Ministry of Finance, because we do some benchmark with the Ministry of Finance, which is quite advanced in implementing this climate budget tagging. And we've got some support also through Ministry of Finance, again, related to the obtaining the support from the expert from the USAID. And now currently is being finalized. Hopefully by this year, 2022, we can establish the framework for the climate budget tagging across the Pertamina Group. I think with that, we will end the presentations. Again, thank you so much for the opportunity for Pertamina to sharing in this highly forum. Thank you so much. Thank you again. A very good afternoon. Thank you.
Well, we're certainly grateful to Ibu Sri Martini and her team for sending along that video in her absence live today. There were a few points that I'm certainly taking into the Q&A. Two main points that I certainly took note of is one around the challenges that she sees coming out of COVID. Certainly one focus for businesses of all industries, but in terms of what she talks about in terms like the changing customer base, the lower demand, the changed demand for different products, and of course the energy transition on top of that specifically for her group, for Pertamina. And the second that really caught my eye is something that I wanted to get into anyway, and we will do that in one of the first questions, and that is around ESG standards. She did mention that Pertamina had a great ESG rating, but that they're focused primarily on their own goals and implementing those goals across their own entities. And then, of course, she went into the 10 ESG focuses at Pertamina and the 15 ESG initiatives. So it kind of underscored how much variance there is in terms of how different entities are defining ESG these days and what specific goals they have for themselves. So I'd like to take this into the Q&A session. We have about 30 minutes. Already have several questions via Zoom. I'm sure there are many in the audience who would like to ask questions of the panelists. I will start off by asking quite a few. And the first one that came to mind, I want to combine something that was mentioned earlier today by Pak Kartika when he talked about appealing to young Indonesians, starting early in financial literacy to get this journey more in the minds of customers and potential customers. So what I'd like to ask the panel, and maybe this is more fitting for Pak Raul and Ibu Viviana, but where do you see this sort of financial literacy going? What sorts of efforts do you think would help to make customers perhaps more comfortable with the digitization? And where do you see this customer base potential growing? I mean, across the financial industry, but also specific to insurance, how much further can we go if these digitization efforts are really taking off in the next few years?
Okay, so Michelle, I will take turn first then. Okay, one of the initiatives about the financial literacy, like I mentioned previously, is about the digital advisors' roles. Why we implement this? This is because based on our experience, the penetrations for financial products and transaction actually is very slow. And this is because of the limited knowledge having by the typical customers. So that's validated by our research. That's why then we empower all of the micro loan officers to be able to assist the customers so they can become more and more digital savvy, of course. They are not reluctant using their smartphone. So the smartphone, actually, they are very familiar, especially for social media, like, I don't know, like Instagram, like Facebook. But once it comes into a financial transaction, then the story is a little bit different. That's why they need someone that they know, that they trust, to become their friends, their partners on the financial transaction. That's why we introduced the digital advisory roles within our micro loan officers. Thank you.
Am I audible? Yeah. Okay.
Yes.
On financial literacy, right? I mean, I'll take a counter view a little bit. I mean, think of, and I'm bringing my experience from India here. Think of how many investment applications have come up recently, right? And a lot of them are essentially telling young people to invest in the stock market or invest in cryptocurrencies or whatever it is, right? And they seem to buy that very easily. So I see financial literacy as a bit differently. I mean, you also need to be able to caution people on the dangers of some of the investments that they don't understand. So it needs to be a fairly holistic, campaign. And anyway, literacy is not easy to impart. We've seen that with digital literacy. So where we talk about digital skills on mobile, this is of course not with very well educated people, but trying to get people online for the first time and keeping them online is not easy. They need to see relevance, and they need to feel safe and secure. So I think all of these aspects need to be taken into account when we talk about financial literacy. The second part of the question is, how far can the customer base go? I mean, if we just look at farmers, right? Well, the example I took earlier of about 25 million smallholder farmers, that's about 9% of the Indonesian population, roughly. So, I mean, obviously, we're not going to get everyone enrolled into an agricultural insurance program, but even if you got 10%, that's 1% of the population, which is not a small amount. However, you also should think about what is insurance coverage. I mean, is it okay to say that a farmer has agricultural insurance and therefore has the insurance he needs? He doesn't have life insurance. He doesn't have, health insurance maybe. So how do you actually define how far you go? So I think these are complex questions. But if you did make that start, and if the farmer began to trust insurance companies and say, yes, this actually works, then they will think about other insurance products as well.
So it is interesting points that you both made on in terms of trust and security, and that's something I definitely want to get into a bit more in terms of the challenges for any population, getting them on board with digitization efforts. Without turning completely to a different subject, I do want to bring in kind of the other side of this conversation, more so on the ESG. But I would argue that the two, especially in many of your presentations, are kind of moving alongside each other in a lot of ways. I want to turn to Pak Rajiv to ask a sort of more investment-focused question these days, but really could be answered by anyone, and that is sort of in terms of defining the standards around ESG. So we actually heard last week at the World Economic Forum that many of the big financial players were talking about the need to kind of decide, well, who's in charge here? Who is setting those standards? Who is deciding what benchmarks need to be achieved in order to judge certain entities on their ESG ratings? There's a million different ESG ratings these days. I saw Ibu Sri Martini was citing Sustainalytics, but of course the ratings agencies have their own. We have one here at Bloomberg. Everybody has a different idea, and I'm wondering, what are your hopes for the sort of standardization globally, and where do you see that conversation going? Who wins out as the ultimate arbiter of what ESG is and what the standards are?
Thanks, Michelle. So I can tell the key troubles which investors see. Number one is the complexity and burden of ESG reporting. That's number one. Second, as you have rightly pointed about, incomparability of the data, because everybody is giving ESG rating. Everybody is giving different ESG framework based on the country, location, product. So that makes life of investor or person who is analyzing much more miserable, because there is not one single framework. As we all know, it is still evolving, frameworks are still developing, so there is no particular standard and stuff. Third thing is poor understanding of or interaction with the ESG ratings, including a distant lack of transparency. You don't know what is going into the data when the final rating comes to you. And we just go by the principle, okay, this firm is giving me this rating, I'm doing good. But what about the other firm who is giving you a negative rating? So that's what being discussed in the World Economic Forum also, and the discussion is on even COP26 summit, which happened in November. There was a discussion around it. And that's where we saw a birth of ISSB, International Sustainability Standard Board. So they will do the similar job what IASB is doing, that is International Accounting Standard Board under IFRS, who gives us an accounting standard to us. So ISSB is going to give us a global baseline of a sustainability reporting under IFRS. So they will work along with US SEC, Security and Exchange Commission, and also with the European Union Corporate Sustainability Reporting Directive, that is CSRD, and that will define a standard for us. Now, we are seeing strong signals coming from the other two end also. Number one, policymakers across the world are increasingly demanding ESG disclosure. Like one of the last co-panelists, Parthamina, you can see the way entire ESG disclosure was being given, like in detail, or even on the BRI side. So that is an encouraging sign is happening. Not just in Indonesia, I will say in Thailand, in Vietnam, in all this country, where regulators are awakening and even the stock exchanges are awakening and asking for disclosure. And most importantly, people who are putting money, that is asset manager. Since they have been putting money into the ESG fund over the last 2 years, they are using their stake of demanding a higher disclosure from their companies. okay, I have added this much money. I need this much more detailed information in your quarterly reportings or in your annual reportings. So hence, this is the reason why you are now seeing disclosure are getting better. And all eyes are currently on, I will say, is ISSB under IFRS to define the global standards for everyone. And you will be hearing a lot more in the coming months about them.
I appreciate that. It is encouraging that some of the standards will sort of come together in your view. And certainly the enthusiasm is there, I can see from investors for ESG investing. Were there any points that you wanted to add, Ibu Viviana, on this point, or Pakro?
No, not for me. Thank you.
Okay, well, we can move on because there's plenty more that I wanted to ask. But one thing in terms of marrying these two issues on digitization and green economy and ESG, you know, it strikes me that Indonesia's population, as has been mentioned today, is quite young and quite digital savvy anyway. And certainly is, you know, as you mentioned, Ibu Viviana is certainly very well versed in terms of social media and mobile technologies, perhaps not so much on board yet with financial transactions, but because there is that base, because there is that youthful population that is very familiar with these technologies, I mean, is there a better way to market these sorts of products, insurance, financial inclusion more broadly, specifically to that younger cohort? And is that something that you think about often, you know, in terms of appealing to Gen Z and millennials?
Okay, thank you, Michelle. So yes, if we are looking at the demography of Indonesia, of course, younger people and also the millennial and Generation Z, that it's become the major part of the demography. But if we are looking at, you know, the customers' profile of each institutions, I think the first thing that they have to understand actually is the customer profile of each institutions, because then that will define how they will approach their digital strategy to their customers. So it means, for example, for like a bank or a financial institutions, that most of the business are in urban areas, then it will be easy for them actually to attract this typical market, because this guy actually is already, you know, like you mentioned, digital savvy. They're using their smartphone for everything. But like for financial institution that like Bank Rakyat, for example, you have to find the other approach, since probably like a 60 or 70% out of your portfolio of your customers actually still not digital savvy enough. So from Rakyat perspective, so we are not only targeting these young generations, because we still have, you know, like Generation X, we also still have the baby boomers. And I think these segments also still play a very important role if we are talking on digital economy and also the green economy.
If you don't mind, I'd like to add to that.
Yes.
Maybe a take slightly. I think you have to go where your customers are, right? And the point is, Gen Z, they're probably on social media a lot. They're probably on their phone a lot. And there may be some other applications they're using, right? So one thing, you know, a lot of companies think that, oh, I'm going to design an app. And what happens is nobody downloads the app, right? Why should someone download your app? So I think you have to really balance this. And I mean, I was looking at a statistic as to how often insurance companies are in touch with their customers. They're like right at the end of the scale, at the low end of the scale, compared to how often a social media company or a telecom company or even a retail company. These are all companies that are fairly frequently in touch. You know, they might speak to the customer, they might engage their customer in some cases daily, some cases, you know, twice a week. but they're all a lot more frequent than an insurance company would. So I think if you're trying to appeal to a certain segment, then you need to go to where that segment is, and that's probably going to be through social media.
That's a good lesson to keep in mind in terms of the digitization journey, especially to not ironically lose the people that you're trying to connect more with, to have more of that human interaction, much like what you were talking about, Ibu Viviana, in being phygital. I love that term that you use to maintain that physical connection to those who still demand that. I've got plenty more questions, but I want to turn to a few that have come in over Zoom. The first one here is for Pak Raul. It says, you said that only 20% farmers are insured. One problem is that it's too expensive. How do you think digitalization would reduce this cost, and also with other sectors such as credit insurance?
Okay, so I don't know too much about credit insurance, but on the farming side, like we were saying, if you took the traditional insurance, which is the indemnity one, I mean, that requires a lot of processes which add costs to your, the cost of insurance. And that's why index insurances are likely to be winners in the long run, we think. They are more transparent also, so it's not just about cost. Of course, cost is very, very important. It's the cost of premiums, and it's also the cost of filing a claim, right? So there are two elements of cost at least. And if either can be reduced or both can be reduced by digital technologies, we can win. Now, for something like weather insurance, I think the capital cost is a bit high upfront, so it'll take some more time to mature. But as we get more data, as we get more history, which is really important. I mean, currently, for example, you may not have all the history you need to understand weather patterns, and as you gather more of that, I think it'll become more and more solid. Hopefully the cost will go down as we come up with newer data sources. I mean, like the ones we mentioned with commercial microwave links. I'm sure there are going to be others. There are going to be more and more sensors deployed around the world, and all of these will eventually have more data than we know what to do with it. So we could potentially design new insurance schemes, have real-time data almost, and use that. But on the credit insurance side, I'm not really sure, where this would go.
Certainly a lot to explore in that area. I want to pair two of the next questions from Zoom together, but at the same time, I want to invite the audience, if they have questions, to kind of signal, raise your hand, wave around for the microphone, and we'll get to you next. These two questions, one is for Pak Raul, one is for Pak Rajiv. For Pak Raul, green transition is important. The biggest question is that how are we going to do that without sacrificing fossils and commodities? And then for Pak Rajiv, the ESG concept is quite tricky. Developing countries are getting pushed to implement ESG investing, but the reality is that the main investor backing up the fossil oil and gas companies are developed economies. What do you think about this?
Rajiv, you want to go first? Or?
Yeah, so I believe the part of the question was answered by Taimur in the previous session. When he mentioned about it, the fallacy of ESG, like when we are talking about the electric vehicle or the batteries and stuff, for that you still need a fossil fuel. For still you need more cobalt, more nickel, more copper. So like definitely you will need the brown energy, or you will need the brown metal to go for the electric vehicle and stuff. And that's where you have to use developed economies and stuff. But as I mentioned at the start of the previous question, that you need to give enough credit, enough funding to the developing economies or to the low income countries as well as communities, so then they can adapt to the green technology. If they can adapt to the green technology, it will be easy for them to transit to the green economy, even if while they are using, you can say, the base metals and stuff for the renewable, they will be actually following the path overall. Now, that's where developed economies or the bigger boys and countries come into the picture of providing cheaper funding, easing funding, or even a support through enough grants and stuff so that developing economies can follow that ESG path. But yes, it will take time to evolve because like in the previous panel also we have seen where Pragita was mentioning that we are still using a lot of fossil fuel for our own energy sources. Even to become fully energy independent, even based on the fossil fuels, or become the modernized economies based on the per capita electricity that is needed, the dependence on fossil fuel will be higher. To reduce that, again, the root cause is, I think, enough resources or funding not being available. So key questions rotate around that. And the environment which we are in, where the dollar cost of funding is going expensive, from the G3, G4 countries, liquidity is becoming tighter, at least near to medium term. It looks a kind of difficult proposition to achieve it quicker. Longer term, yes, it will be possible, but again, dependent on G4 countries, how it will make easier for developing economies to pursue that path.
So we do need to kind of measure our expectations on still holding on to some brown energy, as you talked about. Pak Raul, do you want to take your question?
Yeah, it's a tough one because I have no idea about commodities. On the green side, right? I agree that, you know, by the way, any transition that we make, whether it's digital or green, it's going to cause some disruption, right? So, and it's a good thing if we reduce our dependence on fossil fuels. So I think that's a positive. However, anything, I mean, you take solar panels, they require a lot of energy, a lot of water because they're silicon based. So a lot of water to manufacture. You take wind turbines, they need a lot of water to cool. So there's a cost. It's not like anything is 100. I think beyond that, I don't know what else I can say on this one.
Fair enough. We'll turn to the audience. We do have one question from Mr. Reza, if you could go right ahead.
Thank you, Michelle. I want to come back to the issue of definition and rating of ESG activities. I think BRI and Pertamina have demonstrated their efforts to move into this area. But my question is the following. We are a country where 60% of our energy are still based on coal, right? And now if my insurance or my banking system are investing in those industry, because again, those are basically the local industry that we need to support, how does that impact our rating as far as in global standard, right? Because again, my worry is that going to impacting our green rating on the banking system or on insurance? And therefore, when we try to raise funding in the global market, would we be penalized for investing on that? And that's one question. But if I go back into the rating process itself, I know the European has one standard, and I think China issue also another standard. And again, Michelle basically alluded that there are many other standards, including Bloomberg has its own standard. Then how do we, in the emerging market like Indonesia, actually, because we don't have our own quote unquote international standard, how do we actually come into the process of putting some inputs or influence some of this process? Is it something completely done historically by international or by any countries and forcing it into our system, or is it something that is going to be done by more of community-based type of things? Thank you. This is for anyone that can help with that. Thank you.
Thanks, Pa. Quite interesting question, I must say. Answering the first part of the question, if you are lending to the coal businesses and still not going towards the green side, based on the old rating system, ratings will be significantly down or in the negative terrain. But we are in today's world where now ESG world is even warming up to include defense companies as the part of the indices, because they are now considered as part of social security after the Russia-Ukraine tension. So based on my recent conversation with some sustainability clients also, the most funny part was they told me, hey Rajiv, gas should not be just considered as a transit energy. I think even oil should be considered as a transit energy. It should not be considered as a sin stock. So think about the world which we are going in, that it is matter of time that because of a reduced refining capacity, people will say, oh, diesel should also be a transit energy. So how much time it will take for them to say, oh, coal should be also a transit energy? Because we are going in the world where everybody is now talking about energy security. So that's the key reason why this definition will also evolve. If you ask me, right now these definitions are in a very fluid state, because the country, the region which started with the ESG, Europe, they are currently in a kind of a war, kind of a theater, because of what is happening around. They don't know how they will procure the energies and stuff. They are also thinking if they have enough gas or enough oil supply and stuff, then they can take one step forward of putting few more sanctions on Russia. But that's the key reason why till there is not enough energy security in place, we don't know how definitions are going to evolve from here. But the right point is, till you don't have enough availability plus affordability of renewable energy in place, you cannot say no to the fossil fuel, because energy security should be a paramount for the country's need overall. Hence, the rating should be like how significantly the usages are declining year after year, and based on that, the rating should be given. This is my personal viewpoint for the rating agencies where discounting overall, because you don't know how much renewable energy is in place so that it is self-secured for the audiences and the people, and hence they can use it overall. Now, I hope that answers the first part of your questions. Now, coming to the second part, where you have talked about how the standards are being in place. As I've said, yes, that is the most common question I got from my global investor, that each country, each even set of a location have a different standards of a reporting. China has different, US have different, Europe has different, this part of the world has something different. So that's where there was a little hope after this COP26, which concluded in November, where IFRS told that we will have a two different arm, where IASB, International Accounting Standard Board, is handling everything on the accountancy side and giving world how accountancy standards should be operated at a global level. That's where ISSB, which is an International Sustainability Standard Board, will give you a global baseline framework of a sustainability reporting. As I was telling to Michelle in this World Economic Forum also, that was the most discussed topic. So in that also, they said that ISSB will be closely working with SEC of the US and CSRD. Now, CSRD has been in place over the last couple of years in the Europe. That is your Corporate Sustainability Reporting Directive, and they have a set framework. So if you sit along with them, develop one single framework that applies even for the Chinese company, for Indonesian companies, Indian companies, that clears the criteria. But will that come very quick, very sooner? No, it will take time, because everybody needs to be on the table, particularly the bigger boys from this part of the world also in Asia, whether it is China, India, Indonesia, Japan, all these companies agreeing to the fact that what ISSB is doing with US and Europe and putting on us in Asia, we are accepting it, and hence we will report in that manner. Particularly the Asian companies who have their ADRs and GDR listed either in US or in UK. So we are seeing hopefully some good directives coming out, and hopefully in coming time it will resolve some pressure. But for now, I'll say things are still fluid. We don't know how the ESG definition from various expert and consultancy companies will evolve in the coming time periods. So that's interesting to see and watch.
Any others have thoughts on that one? Or we can move to the last one. There's just one last question we wanted to address that came in over Zoom, as well as had been on my list, and that's just a quite quick question in terms of how much cyber risk is really on your minds in terms of an interruption to this progress. I mean, quite quickly, if each of you could just say one or two words about whether this is something that keeps you up at night, is something that you're trying to address and mitigate against, or if other risks have outweighed.
Okay, I've been asked from my panelists to go first, my fellow panelists. So I'll just say this, cyber risk is obviously it does keep everyone up at night. There's going to be, and as you get more and more data, and as insurance or any other service becomes more connected, I mean, if you think about it, if there's so much personal data that can be collected by wearables, by once your cars become, basically driving sensors, and your home, there'll be so much. So at as you collect more and more data about individuals, cyber risk is going to be a real threat, because then it can create, right now you're worried about passwords and things like that. Later you'll be worried about your lifestyle and everything about you being known to cyber criminals. So they get a lot more data. So yeah, it's a real threat. Certainly something that we need to guard against. But it's it's another journey, because cyber criminals, it's a never-ending war, right? You keep trying, and then you keep getting better, and they get better. So yeah.
We have a second willing to take that on.
Okay, so just to add what Pak Rahul mentions about the cyber risk. So actually, yes, this is one of the biggest threat that currently we are facing of that. Usually a company like, it's not only bank, it's also insurance and other financial institution. Usually they set up a specific organizations to taking care actually about their data security, about this cyber security, to control over the data of their customers within their internal business process. And some company also doing the certifications as well related to this cyber security. But I think there is one improvement, hopefully coming from the government actually, if we are talking about this cyber risk, actually is the draft or the planned ratifications of the personal data protection bill. So to make sure that the industry in Indonesia can maintain and also protect the personal data that belong to Indonesian citizens. So currently this is still a draft, so hopefully the government can help us actually to ratificate this bill. Thank you.
And Pak Rajiv, is there anything else that you wanted to add?
I think it's well covered by both my co-panelists on that part. But I'll say, majority of it is still how you look at the things in this current perspective, because right now the situation is quite challenging with the kind of a global environment we are in. So definitely on the real economy side, it will be still in a progress kind of a mode, but from the financial angle side, not sure how investors are looking at this current situation. So there's a divergent in view, I will say, one from the real economy on ground where how it is practicing, and the second side is how investors are perceiving in this current situation.
Well, I hate to end on sort of a negatively focused question in terms of the risks, and it's particularly in something as that can be as scary as cyber. But we have to stop there, and I'm already a bit behind. But just in the interest of wrapping this panel, a few takeaways. On the hopeful side, we talked about appealing to new customer bases, including farmers who need insurance in many different ways. Ibu Viviana talked about using a phygital approach to be more realistic about appealing to those who aren't yet ready to transfer to digital technologies, but can still be reached and coached in that journey. And also appealing to that younger cohort who are maybe better positioned to use these sorts of technologies and to move forward, and are tend to be quite enthusiastic about ESG, which has garnered enthusiasm across the board. And it's good to hear that Pak Rajiv sees some encouraging signs that standardization will come on board in the years to come. On the challenges, that standardization can never move fast enough, I'm sure. And of course, we talked about all the cyber risks and geopolitical problems out there today that will weigh on all industries. Lower demand out of the pandemic perhaps is still still hard to gauge how you might change customer behavior. So all this has given a very interesting menu of options and goals for businesses in the industry and in the broader finance industry to deal with in the journey ahead. And it's ringing in my ears, Pak Raul, that you say this is a journey and not a destination. I think that can be truly said of both digitization and ESG. So I thank you all very much for your time and your thoughts today. This was a tremendously fruitful discussion, and I certainly have a whole page of questions that I could have asked, but given that we're out of time, I wish you all well, and hopefully a great day too tomorrow.
Thank you.
Thank you very much, Ms. Michelle Jamrisco, and also to all the speakers for their exceptional presentations. We kindly ask all speakers to stay on stage, and also for Michelle to stay online on Zoom. We would like to invite the Commissioner of Indonesia Financial Group, Ms. Masita Kristalin, to join us and give mementos as a token of appreciation for our speakers and also for the moderator. Now, we hope this second session has offered you better insight on our topic about digital and green economy transformation in shaping the future of financial sector. We'd like to thank all speakers for preparing very comprehensive presentations from their respective fields, giving us a broader understanding from various aspects on topic today. This is a token of appreciation to all speakers. We thank you for your time and also for sharing your knowledge and opinions and perspectives on our topic. We'd like to also thank our moderator all the way from Singapore to conduct the discussion in a very excellent manner, and of course for everyone involved, everyone's attention, and also your participation, ensuring a very lively discussion. Let's take some time to take a photo. Ms. Michelle, if you would also pose for the photo session here. We can see you very clear here in the middle of the screen. Thank you.
Step back.
No, please do not. Okay. Thank you very much. Thank you once again. Please give a round of applause to all our speakers, the moderator, and also Ms. Kristalin. Thank you very much.
Thank you very much. And once again, our sincere gratitude to all speakers, to all moderators for their valuable presentations and the fruitful discussion. Bapak serta Ibu sekalian yang kami hormati, distinguished guests, ladies and gentlemen, we are now concluding this first day of IFG International Conference 2022. And today we have had fruitful discussions and intriguing insights regarding global and regional financial environment and digital and green economy transformation, shaping the future of the financial sector.
As for tomorrow, the conference will start at 9 a.m. Jakarta time. We will have 2 more sessions, which will be talking about pension fund, financing the aging population, and also insurance, boosting penetration of insurance sector. And we would also like to remind you to attend our special session tomorrow, which will be about consumer protection and restructuring. A kind reminder to all participants, please do retain your ID card. You must bring your ID card tomorrow to participate in our event tomorrow. So please keep the ID card that you have received during registration and retain it for tomorrow's event.
Ladies and gentlemen, on behalf of IFG International Conference 2022 and the organizing committee, we would like to thank all participants for attending the first day of IFG International Conference 2022. It has been a wonderful and productive day. Assalamualaikum warahmatullahi wabarakatuh.
Thank you and see you tomorrow.
Fundamental sebagai perekonomian negara. Salah satunya yakni sebagai sumber pembiayaan untuk mendukung ambisi dan cita-cita Indonesia untuk menjadi salah satu dari 5 perekonomian terbesar dunia. Pada tahun 2045, PDB nominal Indonesia diperkirakan akan mencapai lebih dari 7 triliun US dollar dengan PDB per kapita yang meningkat menjadi 5 hingga 6 kali lebih besar dari posisi saat ini. Untuk membiayai proyek besar tersebut, dibutuhkan peran sektor keuangan yang tidak hanya berbasis luas, namun juga harus berimbang. Akan tetapi, jika ditinjau kondisi saat ini, sektor keuangan Indonesia relatif masih kurang berkembang jika dibandingkan dengan negara-negara anggota G20. Pada tahun 2020, total aset sektor keuangan Indonesia masih sekitar 115% dari PDB. Level ini relatif kecil dibandingkan dengan negara-negara G20 lainnya. Selain itu, dalam kurun waktu 5 tahun terakhir, struktur aset keuangan Indonesia masih sangat terkonsentrasi di sektor perbankan. Sementara, sektor industri keuangan non